Although the US dollar is higher over the last few days, and even the rates are noticeably higher from 1.7 up to 1.88 right now. Gold hasn't really dropped very much. It hasn't dropped below, say, its 50-day moving average. Does it mean that gold is ready for a strong bounce over the next several weeks? Let's talk about that. First, let me have a look at the US dollar. And what I see on the US dollar is I think there is perhaps a 60% chance that the intermediate cycle on the US dollar finished over here on the 14th of January. Usually these intermediate cycles in the US dollar last for around half a year. Sometimes they are stretched for significantly longer than that. As this one, for example, between early 2018 and late 2018, that lasted for much of that year. So with the most recent intermediate cycle lasting for 234 days, I think there is a 60% chance that the intermediate cycle in the US dollar finished. After all, the 14-day RSI did come close enough to the previous intermediate cycle low and generally to the levels that have been accompanied by those intermediate cycle lows. That's relatively close to the level of 30 on the 14-day RSI. So if that is the case, there is a 60% chance that dollar is starting a new intermediate cycle, which perhaps will give us a bit of a double top maybe, or a marginally new top on the US dollar before the intermediate cycle breaks down. Because in the longer term, I do think that the US dollar is likely to decline significantly. I think I have talked about longer-term gold versus US dollar cycles in one of my recent long-term outlook videos. This would be my 60% chance scenario for the US dollar. And perhaps there is another 35 to 40% chance scenario for the US dollar when the intermediate cycle didn't actually finish over here on the 14th of January. Perhaps the intermediate cycle is continuing, which might actually give us some really unusually long intermediate cycle, in which case the dollar continues up for just another few days before it drops down into that upcoming intermediate cycle low. This, to be honest, is also pretty likely because the correction in the US dollar into the middle of January hasn't really been very severe. Although RSI did drop down to 35, it still perhaps might not really be close enough to 30 for that intermediate cycle low. So 40% is still a substantial probability for the continuation of the ongoing intermediate cycle for dollar, meaning that dollar is going to roll down pretty soon. Next, let's have a look at the 10-year rates, which have also been mentioned in one of the comments from the members at myfinancesteacher.org. By the way, if you want to see regular updates on a range of assets, you are more than welcome to join us. Now, looking at these US dollar rates, I think the rates are approaching a relatively significant resistance zone that's anywhere between 1.95 over here from the late 2019 highs as well as the mid 2019 low, and up into 2%, that's a round number, as well as the late 2017 low and March 2016 high. So we see multiple retests of that same area over the last several years, and we see the 14-day RSI is into overbought area on the 10-year rates. So generally I would expect the rates to cool down a little bit over here, which might be presumably good for gold, as the correlation index over here at the bottom of the screen between gold and these 10-year rates is generally negative. Although notice that sometimes, in about 25% of the time, this coefficient is actually positive. So it's not impossible for gold to come down into its cycle low as the rates decline as well. Same with the dollar. Looking at the gold chart, at the bottom of the chart, we see the 10-day correlation coefficient between dollar and gold, and it is generally negative, although sometimes it does become positive, as over here, for example, at the intermediate cycle low in gold in November 2020, we've seen both dollar and gold drop for a positive 10-day correlation coefficient. So here, that's perhaps 10% of the time we see a positive value on the correlation coefficient. Looking at the gold's intermediate cycle, based on what I expect on the US dollar, there is perhaps a 40% chance that the intermediate cycle in gold has actually finished with a relatively short duration lasting for only about 128 days. That wouldn't be extremely unusual. We've already seen a couple of relatively short cycles lasting for even as short as 98 days in late 2020, early 2021. This scenario corresponds with the dollar's 40% chance scenario. That's if dollar drops significantly relatively soon, perhaps gold is going to continue higher after a bit of a correction down into the short-term daily cycle low and into the continuation of the new ongoing intermediate cycle, which perhaps has already started in the middle of December. As with the dollar, perhaps I would give this scenario only a 40% chance. And the reasons for relatively low probability here is the relatively short duration of the implied previous intermediate cycle down into the middle of December of only 128 days, when the usual duration for these cycles in gold is around half a year. Secondly, while the decline over here in gold down into that mid-December low was quite significant, all the way from 1880 all the way down to 1760, but the 14-day RSI, yeah, it dropped quite noticeably, but not to as low as it has been over some of the recent intermediate cycle lows. And even this mild decline into that intermediate cycle low in November 2019 gave us an RSI of just below 35, whereas the mid-December low was above 36. And looking at the optimism index on gold, in mid-December it didn't really drop down to even below 50. And yeah, it could be the cycle low. All through 2020, we've seen intermediate cycle lows accompanied with the optimism index somewhere around 50 and sometimes even above 50, as in March 2020, for example. This optimism index only dropped down to 54. But zooming out a little bit, we see that historically these intermediate cycle lows on gold do happen with the optimism index significantly lower. So that's one more indicator that tells me that perhaps there is a 40% chance that gold is ready to continue its rally into the new ongoing intermediate cycle versus a 60% chance of gold actually still giving us one more significant drop into that intermediate cycle low before the rally into the new intermediate cycle takes place. And yeah, I realize it looks like I'm trying to look for any eventuality. Gold is either going higher or it's going lower. Believe me, that's not what I'm trying to do here. I'm trying to share the best of my opinion with you guys, but of course, nobody does know the future. And in either case, even if gold has started a new intermediate cycle in the middle of December, I think with the ongoing short-term daily cycle at 35 days long, we should see at least a bit of a cool down in gold into the end of the short-term daily cycle, followed by stronger gold. That's with a 40% chance scenario on dollar dropping down significantly. Or to repeat myself, perhaps a 60% chance scenario for gold to continue down noticeably, perhaps retesting those levels close to 1760, 1780 before a new cycle rally starts. And by the way, in about a week, we do have FOMC meeting coming up. And while the expectations for a rate hike are rising, as we see from around 5% a month ago up to 8% right now, I don't think the Fed is going to hike rates at the end of January. One reason for that is that it hasn't done with the tapering yet. But in either case, I think once we are past this upcoming FOMC meeting, it will be a little bit more clear which of these two scenarios is playing out on gold. So that is my opinion. Let me know, what do you think? Are we going to have one more chance to buy some more gold at the price of 1760? Share your opinion down in the comments, subscribe to the channel, share the video with your friends, and have a nice day.